Okay, on with this question then. Identify and explain. Yep, so that means a couple of sentences per point. The implications of the acquisition. So there's been an acquisition of a company for audit planning, as we always expect in question 1. So identify and explain the implications of acquiring a company for planning, both in the consolidated accounts and the individual accounts, for 8 marks. So I'm going to go, you will do 2 sentences for each point. I'm just going to not do the full bit. You can do the full bit, but I'll just come up with the 8 points. Okay, so we're acquiring a new company. Let's have a quick read. You're the manager, you're responsible for the group. An extract from the permanent audit file is here. So this is the main company. Incorporated 100 years ago. A small pottery making business became popular. The company's products are still popular and they've got a good identity and market share. 10 years ago, they made their first acquisition. Both companies have now formed part of the group. Strong brand name. Nothing really there about the acquisition. Just been in a meeting with the finance director. My notes are attached. One of the issues discussed is a change in the group structure due to acquiring Canary company earlier this year. We've been appointed as the auditor of Canary, so it's new to us. They have a year ending the 30th of June 2012, and the terms of the agreement have been agreed with the client. We need to start planning the audit. So theirs is 2012, and the year end for the group is July. So we have different year ends there, so that's quite important. Okay, and the acquisition took place on the 1st of February 2012 as well. So that's pretty much it. So if you've got a new company, so from the individual company point of view, if it's new, immediately you want to talk about understanding the company. That's one thing we've got to plan for, to understand the company. And that's the environment of the company. And when you think of the environment of the company, you think of the industry and any regulations it's got, although it seems to be in the same industry that we do for the group company, so that shouldn't be so hard. And you write that down. Also, when you talk about understanding the company, you have to understand the company's control environment. The other things you'd have to understand is the ownership structure. You'd have to understand its accounting policies. You'd have to understand its objectives, its financial history, its business model, that sort of thing. Okay, so plenty of stuff to get in there. You know, that's going to be a very good 1 mark, isn't it? So a bit too much there. But anyway, keep going. What else would we need to plan? Also, client access to the books, or access to the client. Yeah, so the books I'm talking about here. Definitely that. Any planning always needs some analytical procedures. So some preliminary analytical procedures, particularly looking for any significant transactions. It's a new year, a new client, so some more audit work on opening balances. We'd have to think about our own scheduling, wouldn't we? Materiality, our own schedules. These are just extra things that I'm putting in. So plenty we could mention there, and you could probably come up with a few more. For the consolidated accounts, first of all, are we going to be a significant component? Because the more that we're a significant component, you know, the more that the work that we do here will help in the group work. So that's really important. Are we a significant component? We are, by the way, because we're about 11.9% of revenue, I think, of consolidated revenue, that is. We'd have to make sure we could identify intercompany balances and transactions, because they get cancelled out. So therefore, you know, we want to make sure that we plan to get those sorted, plan to make sure that the management know that they should be sorted. Different year ends. So we're either going to try and ensure they have the same, is that the plan, or we're going to have to do more work about the missing month. You know, look for any significant transactions, etc., in the missing month where they're different, although that should be done in our subsequent events work anyway. Could write that in as well. So we're just looking for one more point, and you could put about analytical procedures on the groups. And remember, this would be difficult on the group accounts because the year end will have the subsidiary and the start of the year won't. So maybe at the year end, take the subsidiary out. Okay, so we can compare one with the other. New materiality will have increased because of this subsidiary, and also the auditing of goodwill is going to take some time as well. So plenty of things that we could talk about there. For only 8 marks, I'm looking for 2 sentences per point.